Good morning everyone and welcome to another RF Crypto video. Today's markets are much better than yesterday. They're much healthier, they've seen green everywhere, and the general market itself is up by 2.31%. The global crypto market cap is now at 1.92 trillion, which is very close to the psychological $2 trillion level. So hopefully in the next few days it trickles up and it reaches that $2 trillion level. Looking at the market, Bitcoin is up by 3%, Ethereum up by 2%, one of the only times when Ethereum has not outperformed the market when it's gone up, which is quite surprising. The rest of the market, it seems to be in the green, and there is no reason for complaining, although this just could be a consolidation, a correction, and because there were such massive price decreases in the last 2 to 3 days, we're seeing people trying to buy the dip, and also because of leverage, the price has gone down more than it should have, and when people realize that, they bought in because they see the upside potential. Looking at the Bitcoin chart, we see that in the last few days, it tested this $40,000 support level. We see a few reds being bought up, another red being bought up. But when this final red candle made its way below the $40,000 support level, the bears took that opportunity to boost the price from about 39,600 to about 41,338. And since then, the prices have stabilized around this $41,200 level. And now it's right in the middle between the support and resistance bands, which are 40,000 and 42,000 respectively. So now, since the 11th of April, the markets have been trading laterally. So for 3 days, lateral movement, we see the price trading within a support and resistance band. And if nothing else happens, and if the sentiment doesn't change, it will just continue trading between these bands. Any good news and it will shoot up to 45,000, and any bad news will see potential to go down to 38,000. Bitcoin retains $41,000 price as Bitcoin exchange withdrawals match record levels. Despite the lack of bullish sentiment, Bitcoin itself was far from bearish this year. It was far from bearish because we see that since January, the price has been going up. If you look at this chart, the price went down from 69,000 to about 34,000. And ever since then, it's been going up. And that's not a bearish signal. It means that the markets are consolidating, the markets are stabilizing. People are still a bit fearful because such a massive drop obviously took a toll on people's psychologies in terms of trading. At this level here, people were overconfident, people were investing anyhow without sort of fear of repercussion because the prices were just going up. But when it crashed by almost 50%, then people were more careful. That's why we see ups and downs, but more lateral movements as well. The lower time preference, the less cause for panic, fellow analyst Tech Dev demonstrated. And Bitcoin has had more than a passing resemblance to traditional market behavior, even after dropping over 50% from November's all-time highs. In focus this month was a similar chart pattern between Bitcoin now and the Dow Jones from the start of the 1990s. So what this is saying is that Bitcoin is more and more acting like a stock. It's sort of graduating from a very high risk asset to a moderate to high risk asset. The risk level is dropping and it's acting more like stocks. The price fluctuations aren't as extreme as they once used to be. Also, exchange withdrawals heat up. Cryptocurrency exchanges were losing Bitcoin reserves at a rate rarely seen before, implying that any rise in demand would compete with a rapidly dwindling supply, boosting performance even further. Cryptocurrency exchanges losing Bitcoin reserves means that people are removing Bitcoin from the exchanges and storing it in their hot or cold wallets. And what this means is that people want to hold on to Bitcoin because they expect its price to go up, or there are new projects that are coming out that they want to invest in using Bitcoin. But by removing Bitcoin from these exchanges means that there is less supply to go around. And day on day, the demand for cryptocurrencies, especially Bitcoin, is on the rise. So the increase in demand coupled with the decreased supply would indicate that the price ultimately will head in an upwards direction. It's demand and supply law. BlackRock is going to handle Circle's USDC cash reserves as part of a $400 million funding round. So on Tuesday, cryptocurrency payments firm Circle announced a $400 million funding round led by the biggest asset management firm, BlackRock. And to give you an idea of how big BlackRock actually is, by the end of January 2022, it was handling over $10 trillion worth of assets. it had that amount under management. As part of the deal, BlackRock will become a primary asset manager of the USDC cash reserves. So USDC is basically a stablecoin that was released by Circle and is backed by these cash reserves that will now be managed by BlackRock. Also, Circle will explore new ways to apply USDC in traditional capital markets. Not only will they want to keep on transacting in the crypto market, but now they'll want to diversify and try and break into the traditional stock markets and maybe even bond markets using their coin. And because they're so transparent and because they have the backing that they need, especially now with BlackRock, which is a major name in the game, they can get a lot more deals. Their reputation will surely increase and it will compete with the likes of USDT. And USDC, which Circle launched in partnership with Coinbase, has been taking a bite out of Tether's market dominance. Now USDC is the second largest stablecoin with a circulating supply of 50.6 billion compared to Tether's 82.6 billion. And for comparison, a year ago, USDT circulation was 45.9 billion and USDC's was 11.3 billion, meaning that USDC has already closed the gap with Circle's funding deals, partnerships with traditional financial institutions, which allows it to put a foot into traditional markets and maybe allow it to use USDC in these traditional markets. It will put it on track to overtake Tether as the biggest stablecoin. And Tether has had a 3-year head start, and the fact that USDC has caught up to it so quickly is very impressive. No VCs allowed. How NFT.com aims to take on OpenSea. So whenever you think about the NFT market, there's OpenSea, and then there's everyone else far, far behind. OpenSea is by far the biggest NFT marketplace in the world. It's just like how Nokia dominated the cell phone market in the early 2000s. So NFT.com hopes to change OpenSea's dominance of the NFT market. The startup aims to leverage their valuable domain name, which by the way cost $2 million to the company, and they want to onboard mainstream users into this NFT marketplace, which is definitely maturing. Before it was a lot more speculation, now it's more use case. In terms of how NFT.com plans to differentiate itself from many competitors, the company's website clearly states, no VCs and no limited partners. And this is a different step from most crypto and NFT companies. Most of them are backed by VCs and limited partners. Instead, NFT.com will launch 10,000 Genesis key NFTs, which are to be auctioned and sold that serve as governance tokens. And these governance tokens give the holders voting power in the marketplace. And these governance tokens will be overseen by a decentralized autonomous organization. So NFT.com, as opposed to OpenSea, they want to be decentralized and they're going to use these 10,000 Genesis key NFTs as governance tokens to achieve it. As its CEO said, our users are the CEO of NFT.com, which means that using those 10,000 Genesis NFTs, they're going to be able to control what happens in the marketplace. Any new features or anything that is to be implemented in NFT.com has to go through a vote, and those people who own the 10,000 Genesis NFTs will get a vote each. And if the vote is over 51%, then that change is approved, which brings a democratic practice to NFT.com. He has also suggested that creators like Yuga Labs, the team behind Bored Ape Yacht Club, or the founders of projects like Doodles or World of Woman, which are massive NFT projects, should have some control in NFT.com ecosystem, as well as relationship with the marketplace's team. What the CEO said is that they don't have an account manager at OpenSea, they don't have a direct line to the owners, and they're not valued. OpenSea is valued at 13.3 billion, but the people who helped them get there are not the investors who have preferential treatment. It's the creators who are creating NFTs on the platform. Their argument is that these creators should have more say in the network, which they don't in OpenSea. So this is a selling point that NFT.com is proposing, that the creators have power in the network and it is decentralized. So let's see where this goes. Hopefully NFT.com has what it takes to compete against OpenSea, because competition is always good for you and I, who is the average user of these platforms. On other news, Cash App and Chivo helped drive Lightning payment volume up by 400%. And with this, please stay tuned for tomorrow's video on Friday. It is all about the Lightning Network explained in a very, very simple manner. So a Ukrainian refugee currently seeking sanctuary in Poland used Lightning to transfer $100 worth of Bitcoin from Miami, where it was then withdrawn from an ATM in the equivalent Polish currency, all within the space of 3 minutes. And that's the sort of low-cost, high-speed transaction that has seen the Layer 2 scaling solution, which is the Lightning Network, grow 410% in payment volume over the past years. The number of payments that occurred on the network in the past year doubled, while the total value of these payments quadrupled. And a partial explanation for this is owed to the enormous increase in the number of users who have recently gained access to the Lightning Network. This is through apps like El Salvador's Chivo wallet. As you know, Bitcoin is legal tender in El Salvador, and most people use this Chivo wallet to make instant payments, like if you buy a coffee or if you buy a book, then you use the Chivo wallet to pay the coffee shop using your Bitcoin instantly and with very low fees because they use the Lightning Network. Also, the US-based payment application Cash App has integrated the Lightning Network, which has helped boost the number of users using the Lightning Network itself. So, by estimates, in August 2021, only 100,000 users had access to the Lightning payments. By March this year, over 80 million people had the ability to access payments on the Lightning Network, which shows that there is large potential user base. And as I said before, this is because Cash App is now using the Lightning Network, and a lot of people in the United States use Cash App. And despite being originally designed as an electronic cash system, sluggishness of the Bitcoin networks in the resolving transaction gave rise to Layer 2 solutions. The Lightning Network was launched in March 2018 to provide faster and cheaper Bitcoin transactions. So if you try to make a normal Bitcoin transaction, if you want to pay, let's say, for a coffee in a coffee shop, it will take you 10 minutes to make that payment, plus it will cost you a lot of money. So you might pay $2 for coffee, but the fee will be $2, so the price will double. So basically, the Lightning Network solved this by building a parallel network to the main Bitcoin network. Every single transaction that takes place in the Lightning Network does not go into the main network. It accumulates, let's say, 10,000 transactions inside that bubble, and once it reaches that limit of 10,000 transactions, or when two people decide to stop interacting, then those 10,000 transactions are bundled into one transaction and sent to the main Bitcoin blockchain, which is then recorded as a single transaction. Therefore, instead of paying fees for 10,000 transactions, you pay fees for one transaction, and it's much quicker. Because let's say it takes 10 minutes for each transaction to take place. It would take 100,000 minutes to do 10,000 transactions. But if you're only doing one transaction, it will take 10 minutes to do 10,000 transactions, which makes it cheaper and way quicker. Finally, North Dakota hopes to double the $3 billion of clean crypto mining in the state. North Dakota government officials rocked up to the Bitcoin 2022 conference in Miami to lure crypto miners into their greener pastures. They came with the promise of the cleanest crypto on the planet. So every year across the gas and oil fields in the US, especially in North Dakota, huge volumes of excess natural gas that is uneconomical to pipe anywhere is burned off, wasting energy and churning out greenhouse gases. So increasingly, miners are starting to set up rigs to make use of this byproduct of the oil industry. It's not just good for the environment, but financially too, as they get block rewards and they can sell the associated carbon benefits. And smaller mining operations have already been established in the Bakken oil fields in central North Dakota. How they're powered? By natural gas that would have been burnt off in the atmosphere. This is leftover natural gas that cannot be piped, and it has nowhere to go but into the atmosphere. So instead of letting it go, it's burnt. Instead of getting burnt, it's used to power the Bitcoin mining rigs. And using a byproduct to power mines is a good thing, but it still releases greenhouse gases because at the end of the day, natural gases are still powering the mining rigs. Despite being cleaner, it's still a non-renewable source of electricity. It's a good thing, but it's not completely green. Other countries are using renewables to power their mining industry. For example, Norway's Bitcoin mining credentials seem world-class, with the small Scandinavian country hosting 0.77% of the Bitcoin's hash rate using 100% green renewable energy. And I think this is the direction we're going to. And North Dakota's use of excess gas that would have been burnt off to power these rigs is a step in the right direction. Hopefully, in a few years, all Bitcoin mining will be done using green energy exclusively. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed this video, please leave a like. hit the subscribe button, and share this video with your friends and family. Invest wisely, and cheers.